All right, Don, I've been on all your calls for I don't know how many years. Don, I have never seen you bring the passion, not just including the curse word, but the passion that you had. And I want to give you the floor because people think shopping centers are dead. People think no one's shopping. People think restaurants are done, gyms done, bankruptcies galore. And yet you raise a dividend. What's that about?
Well, you got to unpack a lot there, Jim. There's a lot to talk about. And, are things a mess in the middle of a pandemic? Of course they are. But to me, it's not about today. It's about a number of things. Whether we'll be able to make our way through this, I could not tell you how confident I am that that's the case. And more importantly, what's going to happen on the other side of this? Let's start with the dividend for a second. First of all, in a REIT, the dividend is probably more important to investors as a component of their total return than it is to most C Corp companies, I would think. And so there should be, at least in my view, a real robust attempt to continue to effectively go through with the bargain that those investors paid for when they invested in the company. So the notion of continuing investments are a real important part to Federal, so much so, as you pointed out, 53 years. That's since 1967. And while there hasn't been a pandemic like this since 1967, there's been a whole bunch of recessions. There's been a whole bunch of interest rates in the high teens, all kinds of other things. And this company was able to continue to pay its dividend. Why and how? We're built for this, and we're built to power through this. And it's not just in terms of the balance sheet and the liquidity, which is critically important. Even now, we sat at the end of June with $2 billion worth of liquidity, both cash and an unused credit line. Even with all the development that we're going to do, even with paying the dividend continually, by February of next year, which I think you would agree we'd have an awful lot more visibility to the future, we'll still have $1.4 billion worth of liquidity at the company. So we can pay it. Well, all right. Now you can pay it. Doesn't mean you should pay it, right?
Right.
So let me get there for a second.
Okay.
If you believe we can, then why should we? It's all about our confidence in what happens on the other side of this. And that's all based on not just the real estate itself, but more importantly, every conversation that we're having these days with tenants, prospective tenants, about where we're trying to get to on the other side of this. It's all about one premise: improving the locations that they are doing business in.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.